Morning, everyone. So the market's gapping lower this morning. We did see some selling right at the end of the day into the close that took us below Monday support. This kind of band that we've been following was resistance last week, then became support on Monday. Took it out. Obviously, anybody who shorted below the morning low here and took a little bit overnight was rewarded. We're almost back down to 270.50. Gapping below this area right here. So the market's been acting stronger, which it's been since this pullback here, and holding higher. A gap down is a great opportunity to judge whether or not where it's going to be business as usual, and we move right back inside of here, or even back to here, or we attempt to bounce on the open, and then we get hit, and we get one of those bigger pullbacks that we didn't see when we failed at 274. And what that would look like is a move back up to the mid 271s, maybe a little bit higher. Then we fail, we get below 271, and it accelerates. The first thing we would watch for is a move into last week's low, into here. And if it got through that, then we'd get one of those crazy down moves again, which would be, let's say the high was 271.60. It could be something all the way down to like here. I'm not expecting that happens, but we have seen it happen 4 or 5 times already the last few months. So we want to just be prepared for that and kind of use today's gap lower as an opportunity to position, at least for a pullback. And so it's this area right here. If we can't clear this on the open, then we come back down into pre-market support, and we get below pre-market support. That would be the beginning of the case for a larger pullback. And the vice versa if the opposite happens. If we got into this area here, held, and then broke to the upside. On the IWM side, let's see, it's down 0.27. Yeah, so IWM so far still showing relative strength on a percentage basis to SPY. And from a bigger picture perspective on this one, we can't really think about bigger move to the downside. First thing we'd have to take out like 160.50-ish. So if we go back to last week, you can have alert here around 160.80. It'd be this area right here where you're looking for the market IWM to catch a bid. It did. And we want to see it get back above 160.140, which was that support on the way up over the last week or so. All right, so we're in this is that week after the busy earnings season where we get 2 or 3 large cap names report each day. Today it's Target, Lowe's, and Tiffany. Yesterday there was some pretty good price action on the short side and stuff we looked at. Oops. Let's take a look at Target. So this has already bounced a little, looks like. So I thought, just looking at what it did coming to earnings, obviously it was bought into earnings. Based on the numbers, it looked like to me this down move was overdone. You asked me, it broke out from above 70.50, $7, 75, 73. Right here is kind of the midpoint in this up move coming into earnings. The numbers, they missed on EPS, but the revenues were fine. The guidance was fine. If it had gapped down to this area here, I would say look for a bounce back up to 73.5, 74. This down here looks to me like an overshoot. It's already bounced back here, but in order to kind of get back to the midpoint of the move before the earnings, you're going to have to see it holding above 72. This was early before the volume. Like you can see when the institutional money came in at 8 o'clock. Geez, I got to the office a little bit late, but it's certainly nibbling down here at 70. And then once it starts to hold above 71, adding buyers are in control right now. So what this basically means is this here, the institutional money was thinking the same thing I was, which is this was an overshoot to the downside. 72 is a little bit trickier. It's closer to kind of the upside area. So the risk reward's not as good because if you look at it from 72, it's $2 from the pre-market low where they started buying, and it's $1.50, $2 from where I thought would be a reasonable bounce area. So it's the risk reward is about equal at this area right here. So, and they're already selling it here. So it's already coming off. So at this point, we would look for a higher low, like here. So this would be an area I'd be pretty comfortable if they were buying it here, pre-market into the open. Then looking for a bounce, seeing if it fails here at the pre-market resistance, and if it actually holds higher from here in the 72 area, then looking for the play to 73.5, 74. They're on the conference call, so I think they've been saying some pretty positive stuff in the conference call. I think that's probably what caused the initial bounce. We'll go from there. Let's move on to lows. Oh, shit. So lows is kind of the opposite of what Kohl's did yesterday. Pre-market. I still kind of think I had 90 and 91 resistance on this one. My inclination is to fade it, to get shorted. So initially, whatever, this was the bad news day. It came off from 96. I guess this is when they reported last time. Went from 96 to, Jesus, is that right? It went to 86? And it bounced back up to 91.5, 96, 160. So, I mean, I think there's a pretty good probability it fails in this range right here. $90.25 was the high here. So I'm definitely leaning towards shorting this. If it's holding above 90.25, I just understand that it might zip its way right to 91, 91.5. But if it fails at 90.25 and then I see it below 89.80, I want to be shorted because I think that we could be looking at a quick move to 87.5 to this area back down to here. So here we are as we talk, 90.25. Looking at yesterday's price action, when it failed here at 90, went straight down to 87.50. So it's through. All right, looks like we're going to get 91. What's the next level? 91.50? 91 to 91.50. Buyer is in control. They're probably on a conference call too. Starting to put some offers up to short it. Up 91. Oops. I don't know if it really printed up here. I definitely didn't get any prints. It's already down a 90.70 offer. So that's our R2. So we look for failure here. It's traded about 10% of average daily volume so far, about 500,000 shares. Yeah, and if it doesn't, yeah, it's coming back up. So anyway, I'm looking for a failure above here. It comes back down below. I want to see it below 90.50. I feel like it can come in deeper. Um, and the only defensive thing I would do is it fails here, it's coming off, and they're buying it at 90. Then I would be defensive about it. Maybe even get long it. But I didn't see anything there that made me think it would erase last quarter's down move. And again, last quarter it went from 96 to 86, and then when it bounced back up, it failed in the 91 area. Tiffany's is just buyers complete control all-time high, crazy move. Here's the daily. So a couple of years ago, it had topped out at 110, and then got up there at the end of January this year. 3 years later, it was double top. And now it's gapping $6 above the all-time high. So they definitely could be some profit taking right on the open. What would that look like? Well, the first spot would be, what I put on the sheet, 15? So at 8 a.m. when the institutional order came in, it was actually up, they were buying it in 16. This is about 50,000 shares right here. It held 116. I guess that's far enough from 116 now. It opens up in this area here, and it gets sold. Tiffany's is not typically a momentum stock, so when a stock's up this much, gapping above its all-time high, $6 above its all-time high, the only way it's going to hold a gap like that is if momentum players step in and keep it from going back down and filling the gap. Because larger institutions that don't like to chase stocks, their bids are probably down at 112 or 110 or something like that. So that's why, like, if you short something in the pre-market or right on the open that's up a lot, and it gets going to the downside and takes out pre-market support, sometimes it just does that. So, but as I've put on the sheet, there is no resistance, and the numbers were ridiculously good. The buyback at the price, I adjusted it. The buyback was a little bit bigger, but now with the price above 116 where it was when I looked at it, it the general rule of thumb is a 5% buyback is okay. Once you get above 10% of shares, that can really have an impact on how people think about it. So it's only a little bit above 5%. So I'm leaning towards looking for some sort of failure on the open, and then at least like a $2 down move, $2 to $3, depending on where it tops out here. And then seeing after that $2 to $3 profit taking, does it hold? Does it start to move up and kind of hold above some pre-market levels? So this could actually be a pretty good two-way play on this one. Short initially for the quick pullback, and then get long as if it shows stability. The only way you'd be all in on the short is if what I talked about is this pre-market support kind of, let's say you even held the first time and then it bounced back up and could get above 117 and then took that out, then you'd look for the deeper pullback. Cool. So this is the one that got me to curse during the morning meeting yesterday, because it got up to an area where it was likely going to fail, and it happened right as we were doing the morning meeting. And it drops $7. Now I was able to I put up an offer at 65.5 or something, like when it was down here, and it got there on this wick. I got short. I wasn't even watching it. I didn't even see it. Almost got to 66. By the time I started looking at it again, it was below 65, and it was a really nice short. And I covered into this down move into 62.30. I'm pretty sure I was flat into 62. I didn't get long it. Then I started to reshort it into this 63 right here. So that was working pretty well. And the second green bar there freaked me out. It didn't really freak me out, but I was like, wow, this really got back up to 63.70. So it had bounced $2. I was only expecting it to bounce maybe $1, $1.50. And this second bar got me to cover a little bit more aggressively than I normally would have. And so I was not in for the downtrend all the way down to $60. So I caught this move like this here, which was a few dollars. And then was only, I mean, made $1 maybe on this. And I saw it down here and I thought maybe it could bounce from 60.50, but I didn't play the bounce. And then I was off the desk the rest of the day. But it looks like if you were watching it and it kept on failing at 61.70, you wanted to short it here against 62, see if it would test the low. Wasn't the worst idea. I could see why you wouldn't want to do it though, because it was down so much. Deep close at the low, and this morning looking at it, 61.5. What I put on the sheet, 61.5, 62 is, you know, a possible area where we could bounce and fail and come back down to 60 again. And then on the downside, the next major support isn't until the low 58s. And then on Toll, I didn't even forgot to put a resistance in there. Toll was another one. We just liked it as a short coming in. I explained that thesis yesterday. If you forget and you want to watch it again, just watch the morning meeting. But it acted like a short most of the day. I initiated the short on the bounce to 50-50, 40-50 here. It didn't take out the morning low, and I covered it. I don't think I reshorted it when it came back up here in the afternoon again. I was off the desk, but certainly reshorting it against this level was fine. See if it could take out the morning low. And it did that at the end of the day. So this behaved very well all day in terms of on the short side. This got respected in the afternoon. Couldn't get above it. Closed at the low. It's still a short. Looking at it today, if it pops back up into 40 here, this is where I would short it, 39.80 to 40, and play it down to 38.5 to 30. And then finally, TJX had a big attempt at a big move in the middle of the day. I think they may have a lead conference call, but it failed. It didn't pull back that much, but it did fail at 88.5. Came back down to 87. If it can't get above 87.60, did I put that on the sheet? Put 87.70, 80. Kind of had a neutral close, but the way I would judge the strength, if it popped on the open to here and failed, I would think it could definitely roll back over to morning support. So this is kind of the range right here. If it took out morning support and started to hold below that, then you could play it for a deeper gap fill. If it comes up here, it holds up here, and then breaks to the upside, you play it for yesterday's high and then probably up to $89, $90.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.